Is Nvidia cooking the books? Is the biggest company in the world performing fraudulent accounting, meaning they are increasing the perceived earnings and profitability of AI to gain market share and therefore manipulating the market? Well, we are seeing one of the most famous investigative journalists on YouTube, Voidzilla, um, attacking the AI bubble here and talking about Nvidia and their accounting principles. The video, as of now, has 1.4 million views, and that was just 5 days ago. So I feel like I have to address this, and I also have to watch this video with you and react to it, because if the people out there talking about an AI bubble and talking about fraudulent accounting, if they are correct, people like Michael Burry, for example, famous for The Big Short, etc., if these people are correct, then my investment thesis and maybe some of yours might be wrong, because we are long term investors. We are looking 10 years ahead, 15 years ahead. And if we don't see a profit in the AI market and we don't see a profit long term in companies like AMD, like Nvidia, then we might have need to reallocate our resources going forward. So I think it's very important here to see if what this journalist here address is correct. So I'm just gonna watch this video and break down what I hear. I'm gonna use my knowledge as a controller. So I work with economy daily. So understanding how to depreciate, for example, investment should be an easy feat for me. And I do not think it's very complicated to understand how to account for, example, the revenue of a GPU. So let's just see here what we have.
Nvidia says we are not Enron. And as usual, anytime anyone invokes the name, I am summoned like a spirit to judge what's really going on here. All of the world's biggest companies, with the exception of Apple, have been spending billions, even committing trillions of dollars to an AI-centered build-out. And most of that has benefited, guess who? Nvidia. They have basically become a data center company. You can see right here that recently all their gaming PC revenue, it's basically like an afterthought. It's not relevant when we're thinking about their overall business. They are all in on AI. And in fact, our entire economy is basically all in on AI. Nvidia, along with the hyperscalers, make up a huge portion of not only the US economy, but the entire world's economy. So what happens to them matters, not just to people building AI who care about AI, but to everyone.
And here we should not conflict the AI economy with like GDP numbers, etc. I think a lot of people are talking about the market cap of a lot of companies now, for example, Nvidia. But of course, the revenue of Nvidia is not very big. We have just a couple of oil companies, and we are at the same level. So we're talking about market cap and the future prospect of earnings, revenue gains, etc. So why I say this is because sometimes we just talk about that one company is everything for the economy, and if this company fail, then everything's over, and that is not how the real economy works. Obviously, we have the thing we call market capitalization. When we invest in a stock, we want the market cap to get higher so we can sell at a higher price, etc. So that is one part of the economy, but obviously just the real GDP numbers and revenues, etc., and the economy for everyday people, that's something else. A lot of people do not even invest in the stock market, and if they do, they might just invest passively in an index fund, etc. So keep that in mind when you hear people talking about and screaming and making you afraid about the economy going under because of some investments in AI. I mean, companies like Microsoft, Meta, Amazon, Apple, they can just decrease like the spending in AI with 50%, and the company's profit will increase, and the S&P 500 will still perform good. So don't be too afraid when journalists are drumming very hard on what they are saying, speaking, etc. It's all about creating a narrative and gaining that shock factor, etc. It's about gaining your attention.
actually, leading to memes like this, which are kind of true. And the CEO even acknowledged it. During a recent earnings report, which they beat, Jensen Huang said that expectations for Nvidia were sky high and the company was in a no-win position. He nodded to online chatter, saying if we delivered a bad quarter, if we're off by just a hair, if it looked a little bit creaky, the whole world would have fallen apart. There's no question about that, okay? You've seen some of the memes that are on the internet. We're basically holding the planet together, and it's not untrue. And actually, the AI czar of America, David Sachs, agrees. He says, according to today's Wall Street Journal, AI-related investment accounts for half of GDP growth. A reversal would risk recession. We can't afford to go backwards. In other words, we are all in this boat somehow together. I don't know how or why we're in this.
So when you hear someone said half about the GDP growth, obviously we might have, for example, 3% GDP growth, and half of that is AI investment, but it's not half of the whole GDP cake, so to speak. So this is all they are speaking fast about things that might confuse people. So you just have to understand that the AI spending is not half of the whole economy here. So that is obviously important to gain a couple percent of GDP growth. Well, GDP growth is also a number that are not stating exactly how a country is feeling at the moment. You can have GDP growth, but still increasing your national debt of the country. So long term, the GDP growth might not be a sustainable growth, etc.
This boat, but we're all in on AI, whether we like it or not. Whether you like AI, Sora, slop, your 401k is all in. And this is citing a Wall Street Journal article saying how the US economy became hooked on AI spending because all of these capital expenditures have been massively profitable for Nvidia and to a lesser extent, these tech companies, which haven't been making a ton of money from the AI yet compared with their expenses, but have benefited from huge boosts in their stock prices because they're seen as being the future of the future, the AI basically. And furthering the idea that we're just all in on this one thing, I want to mention that Trump recently signed an executive order launching an AI initiative being compared to the Manhattan Project called the Genesis mission. This is from the White House. They talk about the Genesis mission, building an integrated AI platform to harness federal scientific data sets. And specifically, you can see they are partnered with all the leading companies, Google, Nvidia, Anthropic, AMD, Microsoft, AWS. This is all the table stakes we're dealing with. You have to know that AI, and specifically Nvidia, is a gigantic part of our economy.
These type of statements make me a bit confused because we are always trying to get up with some schemes to tax rich people more, tax big companies more. But when the companies invest loads of money in the AI infrastructure that the whole world will make benefit of in the future, and they are not actually making profit in or from the investment short term, then they are actually investing in something that the government or everyday people can't do. So that's a very positive thing, building an infrastructure for the future, and that's helpful for everyone. So I think that we are might be a bit too critical on the big companies out there like Microsoft, Google, Amazon, etc., that are spending at GPUs at the moment because they are actually what they do in terms of building the infrastructure will help so many companies going forward to have a much lower bar into the AI market. They will come up with unique LLM models that are much cheaper than what the big dogs are doing at the moment, because obviously there is always a price of being first. Sure, you get more customers, but you also have to pay for the build out, similar that Facebook are doing with the metaverse, etc. So keep that in mind. It's I think that's important.
And our White House acknowledges that it's basically the only thing keeping us from a recession right now. With most people feeling like they already are in a recession because of their earnings being stagnant and because of inflation ripping. But I want to talk about Nvidia's response, because obviously that sets the stage for the "we are not Enron" claim, because there have been questions boiling up about all of this investment. Is it worth it? Is anyone doing anything suspicious? So we saw Nvidia sent a report to certain outlets basically fighting back on the FUD. And two of their source documents were a guy on X, aka Michael Burry, the guy from The Big Short, who's recently been criticizing them, and another article which said the algorithm that detected a $610 billion fraud, how machine intelligence exposed the AI industry's circular financing scheme. Now, I want to specifically talk about Michael Burry because he's the main thing they're responding to. He has been kind of shaking up the industry with an interesting critique that I don't think a lot of people have focused on. So far, a lot of the criticism about AI bubbles has been that AI is not as impactful as we thought, or that it is being overhyped. But Michael Burry comes to it from a very different angle. And I want to talk about his Substack articles he's been putting out. He's recently become a blogger, a bit of an influencer recently after he shut down his hedge fund. And so things where everyone's collective memory is not quite what really happened. If you ask your average person, if you ask even me what the report the valuations, unlike here.
So he was just addressing the dot-com bubble 1999 there, and if there are any similarities between that bubble and where we are today. Maybe not the main case of what we're talking about today, but what they basically were saying here is that the infrastructure that we did see during the bubble 1999 in terms of building up the internet now is the AI infrastructure. And basically his case here is that we are spending too much on the AI infrastructure.
You actually have companies like Google who are making tons of money. So it's just kind of not the same thing. And Michael Burry argues that that's actually not true, that the dot-com bubble was a lot more about overbuilt infrastructure from companies that were profitable. Specifically, he brings up Cisco Systems, which was one of the most valuable companies in the year 2000, and specifically was valued based on a lot of their interconnecting equipment sales for the internet, the future, basically. And a lot of the narrative at the time was that the internet is the future, so you have to invest massively in infrastructure for the future. And because of that, there was a massive overbuild. And that all blew up when there just wasn't the demand to meet the supply. And everyone had found out that they had overspent on a bunch of infrastructure that wasn't going to be used. So Burry says, hey, look, these dot-com companies that everyone likes to cite, they weren't big companies, big players in the game. The biggest players who were leading the large cap did have revenues. It was just all based on an overspend on infrastructure. And he argues the same thing is happening with AI. I should also mention there's a lot of talk about the WorldCom scandal, which is basically a telecommunication company. And their big thing was essentially accounting fraud. They basically moved line items from the expenses category to the assets and made it seem like they were more profitable than they were.
You can see here that these journalists here are setting up the game to prove his point. I can already feel it, like this is the build up here. The suspense is coming. So let's just see what he's all about.
Okay, so to zoom out, what does this all have to do with Nvidia, right? Why are we talking about the dot-com bubble? Well, Michael Burry is basically making a two-pronged case so far, which is one, that there's a ton of overbuilding on supply, just like there was for the early internet. That's not.
And that I do not agree with. I've listened to every earnings call since 2018 from AMD. And especially lately, I can say that the demand is higher than what the producers can actually get out of the door. It's the same for Nvidia. The demand is so sky high that when we talk about people and humans, we have a problem. But to understand exponential thinking, like it's very hard to understand how much 30% year in and year out will be in terms of gains. It's the same here, I think, with the demand of AI. It's not the usual demand, it's just exponential. And just imagine the future. GPUs will be everywhere. It's not just in data centers, it will be in everyday kitchens, in freezers, in everyone will have like a headset, etc., all day. Yeah, so I don't think um, analyzing what I've heard Lisa Su talked about over and over again and heard Nvidia talked about, that demand is the problem. Also, if you listen to earnings call from, for example, Amazon or Microsoft or Google, you will hear that they are actually choosing their customers. So, for example, Microsoft, they can expand the services on their Azure cloud much faster, but they have chosen their customers depending on where in the world, the geography, the potential of energy, etc. to have a profitable customer for them. So the demand for the product is a lot higher, but they are saying no to so many customers. So I don't buy it that there are no demands for GPUs, or that is lower than what we might price in the market at the moment.
Not necessarily tied to any revenues, and that's going to become a huge problem. And secondly, he thinks there are some accounting tricks that are happening that is basically overstating revenues. And this is in his next post called Unicorns and Cockroaches, Blessed Fraud. This is where he takes a deep look on the depreciation of GPUs. Now, GPUs are basically the lifeblood of Nvidia. This is what they're selling primarily to these data centers. This is what's doing a lot of the AI compute. And recently, there has been an accounting change in how these things are depreciated. Basically, several of the major companies have been shifting their depreciation costs on GPUs.
And I just want to say, these do not have to be a shame from the big companies. Maybe the GAAP, the General Accepted Accounting Principles, the guidelines of accounting has actually changed over time, and some revision, or maybe like Ernst and Young or someone has told these companies that, well, GPUs should actually be depreciated over 6 years. 4 years, 3 years is way too short. This is like big investments. So first, these do not have to be a shame from companies to increase earnings. And secondly, they are saying here that it's a very unrealistic thing to have GPUs depreciated over 6 years, meaning that if, for example, they have 1 billion in cost upfront, that cost in terms of getting into the income statement will be put in 6 different years, so it will be less cost every year, and that therefore short term this type of accounting will increase earnings per share for the companies that are performing or now doing huge investment. And that is a bad thing for a short, for someone that are going short on the company, because they want at least maybe the next year the company to decrease market cap, because if it do that, then that person who shorted the company will earn a lot of money, and depending on how much money you are shorting with, you will obviously earn more money. So Michael Burry are obviously trying to direct the narrative around this company here to obviously earn him more money. So I wouldn't say that he's the most objective person here either. He might have a point that they are changing something, but I'm gonna say that I'm not sure that I'm buying what they are saying here. So yeah.
GPUs from 3 years to about 6 years, or 4 years to 6 years. And this basically has the effect of increasing stated earnings because you are depreciating slower. So if you lengthen the amount of time that you can depreciate something over, your earnings during those years are going to increase. And the problem, of course, is if the actual life cycle of the thing is not as long as your depreciation schedule says it is, because it will make investors think you have assets that really aren't assets, basically. Now, I should say, not everyone agrees this is a mistake. Some people say that there's a justification for this, that several of these old chips are actually being used in what's called inference for these AI models. But today I want to take a look at that, because that is where I think Burry's arguments cut the most true. I don't see why we think GPU life cycles are going to be longer instead of shorter in today's age. I don't think there's any evidence for that. And that leads to Michael.
So why is there no evidence for that? I can show you evidence. I'm just gonna continue here with some Voidzilla here, but after that I'm going to show you some evidence.
Burry's whole argument. He says, responding to Nvidia's claim that they are not Enron, quote, "I am not claiming that Nvidia is Enron, it's clearly Cisco." And this is obviously referencing the idea that the criticism here is that this is an infrastructure over build out. All this commitment for massive, massive, massive data centers, the likes of which we've never seen, before there is revenues to support it for the hyperscalers like Google, Amazon, Microsoft. It just doesn't make sense. And that's his argument. It's not a question of whether AI is real or not. It's just a question of, do you?
I think people are overcomplicating what GPUs are doing and what they are for. They are needed for every type of service that the companies out there are doing today. Like, obviously, if you just use LLM for a bit, you will understand that it's a very useful product. But all the other products, the clouds, the infrastructure, the services, everything is still based on GPUs, and newer GPUs will do everything faster, more energy efficient. So don't overcomplicate the AI story. All they are doing this because they require it already for the type of services they are doing, and going into the future, they will need it even more because the services will be grow more GPU thirsty and more. They will need like more innovation to improve the services.
Need this before there is demand for it. But now we're going to dive deep into this criticism of depreciation. Basically, these GPUs are not valuable past a few years, or are they valuable for 6 years? Because Nvidia said in their whole response to Michael Burry and the haters, they said, rebutting this claim, some companies have increased useful life estimates to reflect the fact that GPUs remain useful and profitable for longer than originally anticipated, in many cases for 6 years or more. But this, even for me, rang very hollow because I've seen podcasts where the CEO of Nvidia is talking about how they're not slowing down the pace of development. They're actually accelerating it. And they're actually introducing an annual cycle for putting out new chips now, which is
Sure, they are putting out annual cadence. They are saying they are doing it, but it's basically 18 months. And for example, the latest product of Nvidia, the Blackwell, is not many companies that can actually buy a lot of it. It's the biggest companies out there. A lot of companies have to use the older products, and obviously, the older products in 3 years will be a lot better than the older products today. Basically, meaning that a lot of companies, it will be enough to have a 4-year-old GPU and performing great results. So just because they are coming with new models doesn't mean that the models that are in data centers, for example, in Microsoft, will be switched out. It will just be a partly ongoing build out.
faster than ever before. So if anything, the pace at which your GPUs will become outdated is not slower than before. It's actually arguably faster than before.
So the first thing is, because the token generation rate is going up so incredibly, two exponentials on top of each other, we have to, unless we increase the performance at a pace that keeps up with that exponential.
Now I want to pause here because basically what he's saying is we are accelerating in order to keep pace with the demand. But this acceleration also means that if you previously, your GPU would sort of become irrelevant in several years, it's actually going to become irrelevant even faster now. And you can kind of see here how the performance of some of their products has increased over time and decreased the amount of energy you need to generate a token. And that's going to become really relevant because, as you'll see, part of the problem for these data centers is the cost per watt. Basically, the electricity cost fundamentally is what you're pushing against. And so as these GPUs get more powerful or get more efficient per watt, then you're going to have to replace it. Otherwise, you're just not competitive with the general marketplace. And alongside that, now we can listen to Jensen explain why this performance increase eventually means that other people's GPUs are literally not worth running because they're so much less efficient than these new models or new GPUs.
Of people where you say, our competitors building ASICs, they could literally, all their chips are cheaper already today, but they could literally price them at zero. Our objective is they could price.
So ASIC is basically, for example, TPUs that Google are building. But if companies like AMD and Nvidia are innovating and doing better GPUs, then they will outperform them. And the narrative here is that all the older chips will be ineffective, not useful. They have to just buy more and more and more, the newest of AMD and Nvidia. And obviously, that is not the case because in the end of the day, we have to see what is the everyday usage of the chips. How can you use the available GPUs at the moment to perform and be innovative as a company? A lot of companies will not have the ability to afford the newest chips, the most energy efficient, strongest chips and GPUs out there. And what you should know is newer GPUs will also, they will increase the energy consumption, but because they can do so much calculations and be so efficient in terms of output and tokens per, or whatever he's saying here, Jensen, it can perform a lot more tasks for the same type of energy, and therefore meeting future demand. But you can still maybe buy an older GPUs that just that GPU, if you don't need more compute just for that specific task, it might be better to buy an older one in the future. So yeah,
them at zero, and you would still buy an Nvidia system because the total cost of operating that system, power, data center, land, etc., the intelligence out is still a better bet.
At a pace that keeps up with that exponential.
Now, I want to pause here because basically what he's saying is we are accelerating in order to keep pace with the demand. But this acceleration also means that if you previously, your GPU would sort of become irrelevant in several years, it's actually going to become irrelevant even faster now. And you can kind of see here how the performance of some of their products has increased over time and decreased the amount of energy you need to generate a token. And that's going to become really relevant because, as you'll see, part of the problem for these data centers is the cost per watt, basically.
and obviously that's a big selling point for Nvidia. They want companies to buy more of the new products, but I will show you firstly here why older chips will still be useful. And as I said before, Nvidia can't keep up with the demand with production of new GPUs. Even though if they have an annual cadence of new GPUs, they won't be able to sell the new ones to the marketplace. They will still sell a lot of the older ones, and in the end of the day, Nvidia will still make money, older models and newer models. But the newer models will not just mean that the older models will not sell, even though they are better.
The electricity cost fundamentally is what you're pushing against. And so as these GPUs get more powerful or get more efficient per watt, then you're going to have to replace it. Otherwise, you're just not competitive with the general marketplace. And alongside that, now we can listen to Jensen explain why this performance increase eventually means that other people's GPUs are literally not worth running, is right on their heels with Gemini 3, which they supposedly developed with just their in-house TPUs, which, funny enough, the NVIDIA newsroom actually commented on, saying, "We are delighted by Google's success. They have made great advances in AI, and we continue to supply to Google. NVIDIA is a generation ahead of the industry. It's the only platform that runs every model and does it everywhere computing is done." But within this, a lot of people sensed a cope. They were trying to just kind of reassure everybody, hey guys, we're still the best, right? But the question is, are they going to be the best for?
So basically, Gemini 3 is on Google's A6, their TPUs, and that's just possible in-house at Google Cloud, their own services. And it's a very expensive feat. So in the future, a lot of companies will be able to compete cheaper with companies like GPT, Gemini, etc. And also, I don't think this is a problem for Nvidia because they are selling to everyone. The same with AMD, while this type of TPUs is another solution more specifically for very, very big companies in specific work tasks like inference, etc. So just this is like Voidzilla here saying that Nvidia will have to just keep innovating every year, new GPUs going out the door, and this will make themselves and their own older chips useless. But obviously that's not the case because demand is not increasing that fast, and they can't produce that many GPUs every year to just keep up with all the companies out there. And I'm going to show you before I end this video here why older GPUs will be very useful in the future. So Sapphire is an AI company, and they became the first large-scale mixed of expert model trained entirely on AMD Instinct's MI300X. That's an old GPU from 2024. Developed even earlier than that. And obviously some other networking solutions, etc. from AMD. And these models outperformed Llama 3.8B, that's from Meta. Also, the Gwen 3.4B from the giant Alibaba cloud and e-commerce company in China, and the Gemma 312B, and Gemma, I think, is also one giant company. Let's see here. Here, Google. Yes. So they are outperforming with an older chip, a lot of more expensive models. And that is because they can be very efficient and utilize the older chip in specific work tasks. And that is why I know for a fact that 6 years depreciation of GPUs in the future is not strange. It's not controversial, because when you are spending big money on expensive products that are useful 5 to 6 years, I do believe that is righteous to actually depreciate the products 6 years. I don't think this is, even though they might have changed it, the companies might have changed their depreciation, their accounting to be more, maybe more in line with general accepted accounting principles, but also increase their earnings per share. I still don't think it's something too controversial. I think it's actually more reflective with where we are at the moment. And when you watch news at the moment, there are a lot of things about an AI bubble, a lot of narratives out there, and every people wants to talk through their perspective. For example, Michael Burry, he wants to short the market, maybe 1 year, so he needs to have the negativity about the AI bubble. A lot of news are getting bought out there, but you have to keep your vision long term if you are an investor, and do your own due diligence and understand when you read and watch YouTube videos, etc. Don't get agitated. Try to break down what's behind everything, so you can stay calm in the boat and make rational decisions. And in the end of the day, you can listen to me if you want to. It's your own due diligence that has to be done. You can't really 100% trust anyone out there in the YouTube space, because we are just trying our best through our own perspective. I try to be objective, but I'm not like a paid advisor for you. You still have your own responsibility for the investment, so always think about that when you watch videos. Anyway, thank you for tuning in today, and have a great time. I see you next time.